to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon. And today we're going to have our weekly strategy roundtable discussion where we talk about Tradespoon tools, current market conditions, and any questions you might have about Tradespoon subscription. So I encourage you, please type your questions inside of the chat box. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. I'm very proud of that experience. Since I left Options Express, I work as a consultant investor in several financial technology firms here in Chicago. I've been trading my own money for over 15 years, mentoring and teaching Tradespoon subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and science. Computer science. Disclosures, we're going to go through some trading examples, so please take a look at the disclosures. Trading stock and options involve risk and are not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level. For general education and information purposes only, please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. Before we talk about trading system, let's talk about current market conditions. Let's look at the bar chart. So again, my market had rallied on the positive news from the reaching the phase 1 agreement. So today, just a few minutes ago, China has confirmed there is a phase 1 agreement. They still need to have reviews of the legal document and make sure that the language is properly worded. But market was up as much as 0.5% up, actually turning negative. So at this point, I think, again, this is a positive news for the market. It could be one of those, buy it on the rumors, sell it on the news, and market has been up, I don't know, 25%, 20% from last January, right? So we went quickly from 230 to 320. That's a pretty large move. So potentially market is going to take a break. But nonetheless, I expect from the season, again, news aside, what we've been saying for the past probably a few months now, probably since end of October, all the news are aside. Usually market does have shallow pullback in December and then reaches 52-week high, and potentially Christmas and holidays, another leg to the upside, breaking the 52-week high. So I think that's kind of where we are right now. We briefly broke 52-week high at 315, and we're staying above this level. So I think I would watch the 315 level. That's obviously a next level of support for aggressive traders. If we break through the 315 level, then the next level of support would be 307. I don't think we're going to break through the 307 level. So any pullbacks, I think, would be met with an opportunity to go long and buy the market. And as of right now, I believe we are flat on the news. Important indicators to watch to see if the trend is changing are treasuries, right? If treasuries are up, I'm not sure why they're up today, but nonetheless, we had a pretty big sell-off yesterday in treasury markets. So as long as the treasury are making new lower highs and lower lows, and the trend is down, yield is up, then that's good for the market, right? Sectors like financial sector will benefit from higher yields. Jesus, thank you. So financial sector is making new highs. So keep an eye on treasuries, keep an eye on the US dollars. These are the indicators if the trend is intact or if the trend is reversing in terms of our cyclical sectors will lead the market or will defensive sectors will lead the market. You can see US dollar has sold off or approaching the 96 level, which is the June low. So as long as the US dollar is under pressure, below 50-day moving average, below 200-day moving average, that's bullish for the overall market, bullish for the emerging market. Right? Emerging market will benefit from weak dollar. We had a pretty strong rally yesterday on a large volume, reaching 52-week high on emerging market, and China will benefit. Chinese market will benefit. China large cap ETF will benefit large moves. You've seen large volume. Industrials. Semiconductors, technologies are all will benefit from that trend. So, so for now, I think that the overall trend is intact. I encourage you to read the daily news. If you go under Quick Navigation Market Newsletter, we are updating. It's a free newsletter. I encourage you to read this. You have a daily update on our view on the market. And if you read the market commentary, you know, the last section hasn't really changed much in terms of the overall trend and what we believe are support and resistance and overhead and the trend. So that's market analysis. Second thing is trading psychology. I encourage everybody to open up an account at Yellow Tunnel. It's a free account where we have two newsletters, also two newsletters. One is the power trading and markets, where we have weekly update of the sectors that are leading the market. And then also the trading discipline. This is the power trading and Dr. Maneker take on different topics in trading psychology. Dr. Maneker is clinical psychologist. He's also a professional trader. He's one-on-one coach to many institutional traders and day traders. So he has a very unique perspective on trading psychology. I love his webinars. We have next one is actually on. I'm going to update the topic, but we every last Wednesday of every month, except this month because of Christmas. But next Wednesday at 3:30 Central, I encourage you to register. We're going to talk about different topics on trading psychology and how important trading psychology for trading, especially when you are faced with a large level of uncertainty. All right, so how do you trading in the current market conditions? Again, predicting the news, the outcome of phase one agreement, whether the market is going to continue rally or is going to sell off, very hard to predict. You can have an opinion on the market, like Tradespoon, we expressed an opinion for the past couple of months that the market is an uptrend. As long as it's an uptrend, it will continue potentially making new highs. But there's always probability that the phase one agreement will not be reached, or once they review the legal documents, there still could be a negative reaction to the phase one announcement. So very important to have a trading plan and trading journal. If you ever attend a live trading room, I encourage you, if you don't have time, or if you cannot attend live trading room, at least review the recording. Recording is for free, available to every subscriber. So I encourage you to review the live trading room recording to see how we trade. And in live trading room, very important to keep your trading journal and trading plan. And in the trading plan, you should always, there are 4 rules that we're following. Rule number 1 is the cash. Always have 30% of your portfolio in cash, especially if you're trading options. If you're trading stocks, that could be a smaller position. Portfolio drawdown, always look at whether it's stock or option trading, look at how many positions you have, and look at the 50% stop losses. Today, for example, I closed the VIX position because it reached 50% stop loss, right? I mean, potentially there could be negative news, right, on the phase one agreement, but at this point it reached a 50% stop loss. So I'm closing the trade. And the main reason is that the 3rd rule is probability of success, and the 4th rule is return on capital. So part of the trading plan, we're looking for trades that are 75% accurate. So that means 3 out of 4 trades across all the models at Tradespoon we want to be successful. Then taking longer term perspective on my trading plan is to make sure that those 3 winning trades will outweigh the 1 losing trade. So if the 1 losing trade is 50% stop loss and the 3 trades, let's say 20 to 40% target gain, then the portfolio will grow every 4 trades. And then it just depends on the frequency. Do you do day trading? Do you do weekly trading? Do you do monthly trading? But the idea is that every 4 trades, the portfolio should grow, and over a long period of time, you can do the math depending how often you trade, what the potential returns will be. So exiting the position to me becomes less. You remove the uncertainty, and even though you might or want to continue to hold on, let's say, to VIX hedge, but you follow the rules. If the 50% stop loss is reached, then you exit position. It becomes a very simple kind of repetitive process. Because when we do have webinars with Dr. Maneker, this is one of the issues that majority of the traders have is, how do I know when to exit the position? What if I'm attached to the trades that goes against me, because usually from psychology point of view, we try to avoid discomfort and discomfort with thoughts or emotions, and we gravitate toward quick and easy rewards. And that skew in the confirmation, in the what is it called? Not confirmation bias, but it is. So the skew is in this bias, whether it's confirmation bias, but there's a bias, and research shows that our negative emotions will have much higher magnitude than our positive emotions, and this is #1 issue that traders report I'm tied to the losing trade, but I'm cutting too quickly my winning trades. And my solution to this is is a trading plan and trading journal. As long as you understand that this is my goal, to have 75% trades accurate, and you compare and you repeat this competitive process, then stop loss reaches 50%, you exit. Target gain reaches, let's say, 30%, you exit. And then it's much easier to deal with uncertainty, because you're stepping out and you're zooming out from day-to-day decisions into taking more of a longer-term perspective on trading. So that trading plan, you do have to have a direction, right? You have to have an opinion whether we reach the phase 1 agreement and the market is going to continue either trading a sideways range or continue going higher, or we're not going to reach an agreement and the market is going to sell off, right? So you have to have directional bias that when you trade, and learning how to manage position entry and exit, and that's what we're going to talk about today. Some of the goals for today: to go over the Tradespoon tools and go over the different setups in terms of how do you find stocks with 75% accuracy. So let's go over that. So most important is when you make a decision in trading, you always want to know what is the probability of success, right? So in our tools, basically, when we say that if market is going to trade in a range and at 318 it's overbought, right? The market is overbought at 318 and at 313 it oversold. You want to know what the probability is. So if you go short in the market at 318, then you have 7 out of 10 times you will be correct based on the probability. If you go long at 313.84, 3 out of 4 times you will be correct. So I encourage you, when you're using any type of technology or any type of decision-making process, always look for these probability of success or accuracy. So right now, on Sunday, model actually predicted 3 out of 4 times. So 80% of the time that the market will be lower than it was on Sunday. This is probably one of the times where the model is wrong, and again, usually it's because of some kind of news, like U.S. signed an agreement with China. That is a positive outcome. Model did not know about that outcome on Sunday, so it's wrong, right? This is the 20% when it's wrong. But every time you structure a trade, you should always ask yourself, what is the probability of success of that trade? You can use implied volatility calculations. But if you don't have any calculation, let's say you buy a stock because RSI is 30, right? The RSI is a technical indicator, it reached 30 and you just buy. And that's great, but then the next question will become, for this specific stock or for this specific ETF, how often does it actually reach that? If it's 70%, it's great, but maybe it's 70% for spiders, but it's only 50% for energy, right? So those are the type of questions you should always ask. And then probability of success will determine the return on capital. So based on that trading plan, we have 3 different services that we offer at Tradespoon. One is 3 different categories. So one category is the live portfolio and trading room. So when we trade in a live trading room environment, a lot of our subscribers basically ask, Vlad, we just want to have exposure. Every time you trade, we want to know and we want to trade, right? Or at least consider trading. So we expose our different portfolios via emails and SMS messages. So premium portfolio is the first one. This is where I trade option spreads. Every week we post an idea. So here's a trade idea. On December 9, we posted buy XME, right? You buy XME, $28.60. Either buy a stock or buy an option or buy an option spread. So those are the 3 choices. You actually see whether I got into the trade or not. So you will get an email and SMS message, and you get a chart, right? So right now, no, that's actually the wrong chart, sorry. Got updated, but you get a chart of the XME with support and resistance levels. So that's, and then you, depending on what your comfort level, you can either buy a stock or option spread. So you get email and SMS message every time I would trade. You also get a video, instructional video of why I got into this trade, what's the probability of success, what's the view on the market. So this is a great way for somebody who is new to trade once a week, not overtrade your account, invest less than 5% of your portfolio into a trade, and every month, usually you have maybe 4 positions. 4 times 5, that's 20% exposure, 50% stop loss. Your maximum exposure is 10%. Very conservative way to learn about options trading, learn about stock trading, and not overtrade your account, which is probably the most common issue with the new subscribers. So I really like that portfolio. You can see all the historical trades. You can see we're averaging on option spreads 77% accuracy, right? So we're at 75% accuracy. So 3 out of 5 trades will be successful. So then the job is to make sure that none of the trades are if you do have a losing trade, it's at 50%, and you don't hold on to the trade where it's 100% losing trade. Because if one trade is 100% losing trade and you still have 3 trades that are, let's say, 30% winning trades, well, then overall your portfolio will deteriorate, right, over a long period of time. So that's kind of makes a decision of entering or exiting much easier. The next portfolio we have is live trading room. So in live trading room, we have different types of subscription. You can have access to morning bell, you can have access to closing bell, premium subscription or lead subscription. And this is where you can participate live and watch, whether Scott or myself trade live. And you can see the schedule here, who is doing closing bells and morning bells. And the 2 features that I really enjoy and kind of proud we developed is that we have real-time integration with my portfolio. So every time I trade, you get email and SMS message real time. And this is not a Twitter feed. This is not a back test or hypothetical trade. These are actual trades in my live brokerage account. And as soon as they occur, you can see, I'm trying to close UNP spread for $4.40. I closed the VIX spread for $1.30. I closed the Merck short put position. I closed Costco, short position. I closed Adobe short position. So real time, you get messages every time you can get a trade, and you can research. If you want to see VIX and you want to figure out, what did I do in the past 60 days on VIX, you can go in and basically say, right, okay, so Vlad traded around VIX position. we're buying at 259, closing at 4, buying 290, closing at $1.30. But again, main driver is, I bought at 290, spread is at $1.30, it's 50% loss, right? A little bit more than 50% loss. I mean, VIX has now jumped to $1.80, but this is kind of, do I get emotionally attached to this trade? I basically say, well, it's December expiration, not much time left. Looks like phase one agreement is in place, and it's 50% losing trade. Spiders, I decided to hold on at least till the end of the day on the hedge, because I bought it at January 314. I sold it at $1.66, maximum loss is $3.20, 50% stop loss is $1.60. So I'm right at the 50% stop loss, a little bit less. So then I can be patient, right? Maybe spiders will sell off, right? Maybe it's kind of buy on the rumor, sell it on the news, and market wants to take a little break from this rally. And but this type of the trading plan, the long-term trading plan, kind of helps me stay focused and not be attached to the trade. And if it's 50% stop loss, okay, then I have to exit the trade. If it's 40% target gain, I have to exit the trade, irrelevant of what my bias is toward whether during the legal review there potential would be issues. A lot of things can happen, but ultimately very hard to predict the outcome of these news. So that's Elite Circle, Traders Log, real-time communication, email and SMS message, not email, SMS message, and Trader Log that you can always go in and review the actual trades. And then the final portfolio are robo-investor, right? So we have option spreads, that's the premium portfolio. We have live trading room portfolio, or outside of live trading room. If you want to know my trade outside of live trading room, you get it through this Elite Trading Circle. And then the robo-investor is a newsletter where we provide, in similar fashion, 1 trade a week. So 4 trades a month. So you get 4 bi-monthly newsletter. Every 2 weeks you get a new newsletter, around 4 trades a month. Again, at any given point, we might have anywhere to 10 to 20 positions. So that's where allocation is very important. You want to allocate less than 5% portfolio, right? And then you would have maybe 10, 20% in cash. And then depending on the number of positions, you might have anywhere from 10 to 20 trades. This is the same thing. You get email and SMS alert every time I trade, whether I enter or exit the position, you get an SMS alert. You can see all the orders, positions, and when you look at the newsletter, you can actually see what are the 2 trades that we are adding into our portfolio. And you can continue reviewing them using our tools. So if that's a very common question. Hey, Vlad, I think you're only a stock trader, or you're only an option trader, or you're only day trader, or you're only a long-term trader. We try to have different services and tools for different types of traders, whether you're doing day trading or long-term trading. Those are the tools you have. And I've been talking for the past half an hour. How many of you, if you guys just type in, so I know, just type in, whether you trade stock or options, and how long do you usually hold the position? If you're a day trader, I usually hold position, minutes or hours. If you're a long-term trader, just say I usually hold position for 5 days, 30 days, or if you're a long-term investor, maybe you hold position usually a year or 2 years. So just type in stock or options and how long. So then I get a feeling of the audience and where do I need to spend more time explaining which services. But the idea is that we do have services and tools for different types of traders. So this is a live trading portfolio. What do I trade in live trading portfolio? Which trades are carefully scanned not only for probability of success, but also how often have we been correct when those signals occurred and we traded them. So we have 3 different services where I encourage you to start trading, right? If you don't participate in live trading room, which signals are the most accurate symbols in terms of probability of success and in terms of backtesting when those signals occur, where will be profitable or not. So 3 services: active trader, monthly service, and weekly trader. Okay, trade futures, mostly option spreads, ETF, stocks, day trading. Okay, day trading versus long-term trading. So we have mixture, stock, option, futures. This is great. For the futures traders, we don't trade futures in the live trading room environment. We do have futures toolbox, kind of shows you where the support, the low, the high, and then the predicted trend for the futures. Right, market as of going into this announcement actually sees a downtrend in future based on the futures data, slight downtrend. So option weeks, okay, so different time horizon. All right, so good. So in the live trading room, 3 different services we're trading: active trader, day trading, where I hold position either 1 hours or maybe 1 day, overnight sometimes, depending again on portfolio size. Weekly trader, I hold the position for less than a week, and then monthly trader, hold the position between 5 to 20 days. So depending on type of how long your holding time, and that would be the more appropriate services. A lot of people say, well, I don't know what kind of trader I am. Usually that means you're new and you just haven't traded long enough. A lot of it depends, again, on trading psychology. What are you comfortable with? Are you comfortable with what type of personality you have? That will determine whether you succeed in day trading or whether you're going to be more successful holding position for 30 days or 10 days. So this is something you would have to discover for yourself, and we do provide you the services that you can follow, and then you will see what you're comfortable with. So for day trading, it's active trader. We provide 3 bullish, 3 bearish trade ideas every day. We provided today WHR. All right, so WHR, Whirlpool, depending on U.S. China agreement, opened up down on the news that potentially there might not be a phase 1 agreement, or it's not complete. All the China sensitive stocks, stocks sensitive to the phase 1 agreement sold off, WHR sold off. Again, entry point 147.72 or 151.54. So let's look at WHR, see what happened. So if usually we always say wait for at least 10-15 minutes for the market to find support, but I'm not sure what the open price is. But let's say you put an open order or you waited for 15 minutes, and let's say you got in at 146 or 148, right, based on the active trader, right? So if you decided to do it on entry 1, you would put a limit order at 147.72, right? So you would get filled at 147.72, and right now the stock is 149.64. So you would make $2, which is roughly 1.5%. So in day trading, I usually look for 0.5% target gain, anywhere from 0.5% to 1%. So in this case, I would just exit the trade because it reached 1% target gain, $1.40. So day trading, 1% target gain, 1% stop loss, right? So if you did get at 147.87, depending on the open price, 1% is $1.50, that's 146. I mean, you might or might not have stopped out, right, based on that 1% stop loss. That's why usually I would, if you participate in live trading room, I usually wait 10 to 15 minutes, especially if I know that pre-market there's already news about U.S. China potentially not reaching an agreement. So it only makes sense when you do see a sell-off in the market to wait that 15 minutes. But that's the idea of active trader, right? You would either wait you could buy it based on yesterday's close, so you can put an order to buy at 150, 154, then you're at the mercy of the open price. And I'm not sure what the open price was. I can look it up. Let's see, what was the open price? So open price was 151. So if you put a market order or the 151, 150, 154, you would have bought at 151, and then you would definitely get stopped out. If you waited for 147.72, then stop loss is 146.24. You probably did step out if you got filled in that price. So that's how you would use these active trader service. 1% target gain, 1% stop loss. Usually we wait 15 minutes for the market to open and find support. And if you do see market sell off, if you look at the pre-market futures and you see that potentially US will not reach an agreement with China, then it makes sense to just wait 10 and 15 minutes, because the low and high might not hold. Today, you can see the low did not hold for WHR. It was as low as 144.54. Usually we would get emails basically saying, hey, Vlad, model was wrong. What happened? The idea is, one is, none of these signals are 100% accurate. And I'm not sure if that's obvious to everybody, maybe not, or maybe yes, I'm not sure, but irrelevant. Support and resistance, there's always probability whether the signal will hold or not. It's never 100%. If you can find something that's 100%, just let me know. I'd like to also trade these signals. But you know, some of them 70%, some of them 90%. You can see from live trading room. We did yesterday Adobe, right? Let's see, what was the trade? I think Adobe. So we did the earnings play, Adobe, right? And I like to do these earnings plays because they really capture the essence of trading in terms of structuring your trades, in terms of probability of success. You know, how often will this trade be successful or been successful? And then what is your return on capital? And the idea is that if you're looking for high probability of success, then you will sacrifice on return on capital. So if your personality tells you want to be correct more often than not, then I took 327 stock and was able to collect, I think, 35 and 30. So about, if it doesn't, yeah, so about 65 cents. So that's 20 basis points. So I was able to collect 20 basis points on the trade, and we'll do the estimation that maybe 1 out of 10 times Adobe will actually move 10 points, right? That it will move from 300 level to 270. Adobe was at 300 level prior to the earnings announcement. So 10% move only happens maybe 10% of the time. And based on the estimated move analysis, based on the implied volatility, the expected move was only 6%. So this is a very rare occurrence, but this trade is not 100% accurate, right? It's maybe 90% accurate, maybe it will be 92% accurate, but it's never 100%. So that's very important to understand, that the important part is that you want to use tools that give you statistics, right? But you cannot expect that tools are 100% accurate. So when you do see a sell-off in the market, like WHR sold off because the market did not anticipate. Yeah, I did close Adobe. I did close the Adobe trade. I mean, for a penny, just because. And again, why did I close for a penny? Because if China came out and said, you know what, we actually did not reach phase 1 agreement, then potentially Adobe would have reached 280. So then I'd rather spend 1 penny and close the trade, right? It cost me nothing, than see this trade all of a sudden go against me. So that's good example where sometimes it just makes sense to close these trades and pay 5 cents, even though it's a low probability event. But what if market did close, right? What if market did sell off? So that's an example of Adobe. And discussion of probability of success, right? So WHR, it did sell off 144. Why? Why did model was inaccurate? Well, because China tweeted overnight during agreement that potentially there is no phase 1 agreement, and and details, and the market sold off, and WHR sold off, and now that seems like there's more clarity in the phase 1 agreement, and it looks like there is a phase 1 agreement, at least verbally has been agreed. There's no signature yet, but verbally there is an agreement on both sides, and then market at 150. Right where the model predicted at the start. So that's why model is great because it will tell you 77% of the time, 71% of the time it's correct. There will be 20% of the time when it's not correct. And that's what trading is all about. Trading is about longer term perspective, trading on your trading plan, not be so tied to one day event. Even if you're on the wrong side of the agreement, let's say you were bearish and now market is bullish, you close your trade and you move on, right? You don't try to rationalize, going through the self-serving bias, why, it makes sense to hold on to these index calls because, and you just follow your plan, 50% stop loss, okay, and then you move on in next trade and then the next trade. So that's probability of success, that's active trader. What are the other common questions? So probability of success, very important, right? Model grade is important. Virpil model grade gets a B. Spiders model grade gets, the idea is equivalent of also B. Let's see, what's A? Merck. B. Anything A? Apple. Apple A. Okay, so some stocks model predicts better than the other stocks, and the idea is there's no such model in the world. Doesn't matter how good of how many billions of dollars you're spending on quants and quant engineers. You cannot develop one model that predicts all asset classes, all time horizon equally well. What usually is done, you have different models for different time horizons for different asset classes. And each model predicts differently, different asset classes. So if you see A or B, that doesn't mean, it means that model predicts Apple more accurately. It's been more accurate than it predicted spiders, right? If it says NA, I don't know what stock is NA. Let me see. Some small cap bias stock. Let's see, index mining. NA, right? That doesn't mean that the model is inaccurate, right? All it means is that this is the prediction. Today it's 1848. It's outside of the prediction. At least I don't even know what this is, but they index mining, FTSE 350 index mining. Okay, but the trend is down, and you see this. It is down. But the low and high was not predicted well. That doesn't mean it's always the same case. Let's look at GPTC or GDC. So it says NA predicted 884 by 853, but it, Bitcoin Trust Fund is at 873. So NA doesn't. We just don't have enough data to tell you how accurate we were in predicting GBTC, because we don't trade or we don't backtest every single stock. But the model, today it's pretty accurate. Right? It says 8073. That means buy at 853 and go short at 8. When it was at 879 or approaches 884, you probably want to go short because it's overbought. And at 853, you want to go long. But we don't have any statistics to tell you how frequently we're correct on Bitcoin. Right, but the model is trained on the Bitcoin and makes the predictions, and you're still better off at least looking at these support and resistance levels, because they will give you a good indication where to buy and where to low. So we are concentrating on S&P 500 stocks and all the optionable stocks. So universe of 2,000 to 3,000 stocks, we backtest them, we trade them, so we have more data. The other universe of stocks, it doesn't mean we're good or bad. You would just need to judge for your own self, just to look at the data. So spiders, what else is important? We talked about, so range trade is the trend analysis. So we see that the spiders are slightly positive going into today's announcement after yesterday. We do see spiders are continuing going higher, potentially retesting 320 level by the end of the year. What else? Today's trend is important. Very important to look at this data and basically say, not to make a decision. Oh, model says the stock market is going to be at 320. So that means I'm going to buy spiders today, and on December 20th it's going to be 320. That's not what we're trying to predict. We're predicting that today 314 is support, and if it drops to 314, you should consider buying. We also predicted that 317.84 is the high, and if it reaches 317.84, you should consider selling, and you can actually see that that's exactly what happened. And in the next 10 days, we do see positive trend, whether it's going to be 320 or whether it's going to be 318. There is no probability of that event. The trend is positive. We know what the support and resistance, but will it move 1% or will it move 0.5%? That's not what we're trying to show you. We're trying to show the subscribers that the trend is positive and you want to trade as a trend. And then the entry and exit decision should be based on your trading journal and your trading plan. If you're consistently looking for 1% gain every time you trade, okay, then if you buy at 317, 1% gain is 320. So then you wait for 320, right? Market usually does not move 1% every week, right? You know, market might move 7% the entire year. So that's where what you need to see what the reasonable and unreasonable expectation of the move that you're waiting for. So that's active trader. We talked about WHR. Another thing that we can. So yeah, okay. Let me know if you guys have any other questions. Or you can trade options, right? Maybe 100 shares of WHR, you have to spend $14,000 of your buying power. If you buy 146 call, one call, that will be $170. So you buy one call for $170. So market has been fluctuating between positive and negative, right? So it was up 0.5%, now it's down 10 basis points. So everybody's digesting the news and trying to decide what to do next. So we talked about stock and option trader, we talked about active trader. Let's switch to monthly trader. So a lot of you said weekly, you know, we hold position for 20 days. Your time outlook is, you know, a couple of weeks to a couple of months. So we, on December 9th, we recommended Boeing. Buying Boeing, again, you have a choice. You either buy on December 9th, you either buy at previous close, 354.09. If you bought it at 354.09, 54.09, then you would be down now 7 points, 2% down on this position. Here, stop loss is 5%, 328, target gain is 5%, holding time anywhere from 5 to 20 days. I personally usually look about 2.5% gain. Again, based on the portfolio size, you might look for different gains, but in this example, on average, it's 5% gain, 5% stop loss. If you were patient and waited for the predicted low, 346.20, well, you'd probably just be basically broke even at this point. I consider entering the second half at 337, 345. And that's the stop levels. So very important, you know, again, question a lot of people ask, well, how do I determine strategy A, strategy B? A lot of it depends on market volatility, right? If you see that pre-market futures are down, then you wait for predicted low. A lot of it depends on your psychology, right? If you wait for predicted low, your percentage of winning trades will increase, right? Because you're buying stock at the discount at what we are predicting the low. Does predicted low happen every single time? No. So that means you will trade less often. So if you have an aggressive personality and you're not patient, you don't want to trade, you know, you don't want to wait a week, potentially not having any trade, then, you know, you want to be consistent and, you know, always buy at previous session close. If your personality looking for higher percentage of winning trade, but you want to have less trades and you don't mind waiting, then it's better to wait for the predicted low. So again, a lot of it depends on trading psychology, a lot of it depends on pre-market volatility, right? When you actually decide to enter the trade. Similar fashion, if you have a small portfolio, you want to leverage your account, buying 100 shares of Boeing, you have to spend $32,000 of your buying power, which majority of the people don't have. So then if you want to own, I mean, you can obviously buy, you know, 10 shares of Boeing, or if you want to buy 100 shares of Boeing, you can buy 325 call, have more exposure to Boeing this way, but you're only risking, in this example, $2,000, right? 100 shares, buying at 21.20, you're buying at $2,000. So that's an example of the monthly trader and option trade. So you have stock and option trades. And we talked about monthly trader and active trader. So the next one, any questions so far? All right, and then weekly trader. Again, same thing. On December 9th, we're posting a signal, buy at 42.82. If you waited for 42.82, it never happened. If you did buy at 44.08 on December 9th, 44.08, then you would be up roughly 80 cents, so roughly 2%, right? You would be up 2% on this trade. So this is a weekly trader, different model, different time horizon, but the process is the same. On Monday, trade ID is posted on Sunday. On Monday, you have a choice. Either you buy at previous low or close price. In this example, previous low would never reach, so you would not be in the trade. If you trading, if you're looking to trade more often and you don't want to wait, then you buy at previous close, and in this example, you would be profitable 2% on the trade. Again, exit 2.5%. 44.96, you would actually be out. So 2.5% target gain, 2.5% stop loss, and the trade usually lasts 2 to 5 days. So different model. Again, if you want to buy 100 shares of BSX, you would have to invest $4,000. If you manage a smaller portfolio and that's more than 5% of your account, then I encourage you to consider trading options. 100 shares of 41.5 call that costs $1.30 would be $130. So well-defined risk. You cannot lose more than $130, or in this example, it would be $2.60. So the maximum risk was $260. You put a stop loss at $1.70, and you put a target gain at $3.45. And in this example, this is where options have advantage and disadvantage. On the disadvantage side, you have to be right by that time. And if you're not, then potentially you can lose 50%, or if the market sells quickly, even more. So you can have larger losses, but your losses are limited. If you buy one contract, $260, and it's less than 5% portfolio, you can really lose more. If you buy stock and the market sells off 10%, well, you can lose more than $2.60, right? If BSX sells off more than 5%, then it'll be more than $2.60. And then $3.45 gain of 80 cents, that's 40% profit, right? So you have larger losses, larger gains, and more leverage. So definitely advantages and disadvantages trading options versus stock. Any questions? Can you guys hear me? Usually I have more questions than today, but again, we're approaching holidays, so maybe everything is clear. You guys, is the sound okay? Angelique? Phil, Thomas, Jesus, Bach, Sama, all good. All right, you guys just fell asleep? All right, perfect. Oh, there's just delay. Okay, great, thank you. Any questions about portfolios, services? We have about 8 minutes. So I know I go quickly. So just let's recap. If you're looking for live access, I encourage you to, Elite Circle gives you access to everything, right? To emails and SMS messages every time I trade. That's probably the biggest differentiating factor. Then if you don't want to know every time I trade during the live hours, not during live hours, different portfolios. Robo Investor, you get email and SMS message every time I trade. Stock portfolio, premium portfolio, options, spreads, or combination of stock and options, depending on what you feel more comfortable with. In all cases, you get either SMS message every time I trade, Elite Trading Circle gives you a SMS message for day trading, or if I close the position on, 1 p.m. What else? And then second category are the signals. What do I trade in live trading portfolio? I trade active trader, monthly trader, and weekly trader. And then the third category are the tools, right? If you need tools for confirmation of your trading, we went over Stock Forecast Toolbox today at length. You can buy Stock Forecast Toolbox membership, where you get access to Bitcoin, Forex, futures, company screeners, managed portfolio. We talked about seasonal chart. I use that to make decisions about long-term trends. So that's seasonal chart. We have focus list. We have probability calculator, different tools that the tools membership will give you access to, and different screeners. Right? We have bulls without earnings, bulls with bears, and different other stocks. Any questions? Okay. All right. If you're visiting grandkids, have fun with your grandkids. Congratulations on your grandson's birthday. Asama, thank you. Where can you sign up for Yellow Tunnel? You just go to login. Yeah, if you go to login, you can create a new account. Create new account under login. Thank you, Don, for the question. Let's see any other questions. What else? So we talked about tools, portfolios. So in free education, right, we have workshops, right? You can register for live event workshop. We have active investor workshop. This is free. We have next one is on January 7th. We talked about newsletters, 3 newsletters, recordings. We have support. Under Learning Center, we have the recordings we talked about, smart trading guides that talks about long-term trading plan I execute in live trading room environment, short-term trading plan I follow in live trading room environment, different manuals for different tools. I encourage you to look at this. You can practice your virtual trading, and you can also look at the trading guides. All right, guys, have a great weekend. Enjoy your time with your family. Angelique, Chuck, Jay, Jesus, Jim, Marvin, Asama, Patrick, Pavel, Phil, Ronald, Stephen, Tom, Tarsten, Trader, Vitus. Thank you very much and have a great weekend and enjoy your time with your family. And I will see some of you during the closing bell in the next couple hours. Be interesting to see where the spiders end up today. So we're actually turning negative. So we have kind of Biden rumors sell it on the news type of event. Okay. All right. But I think trend is intact. That's good. And I will, unless there's some kind of news that happened in the past hour. But anyway, have a great weekend. And I hope to see everybody either today or tomorrow. All right. Thanks, guys, and have a good day.